Hello, everyone, and thank you very much for joining us today for today's webinar presenting the Phase 1 feasibility study on the Perron high-grade gold project in Quebec. My name is Aaron Stone. I'm the VP of Exploration here at the company. Also on the call with me today is Victor Cantore, CEO and President, and Jonathan Garnier, who is our mining engineer. So if you have any questions at all from geology, finance, engineering, we'll be here during the Q&A session to help answer those. So a bit of housekeeping before we get underway. You should see in the bottom left-hand side of your screen a little button that will, or a Q&A box that will allow you to put your questions in there. So please, any questions that you may have related to anything whatsoever to do with today's feasibility or exploration or any other questions that you may have, please pop them in there. If we don't quite manage to get to all the questions today and we unfortunately don't get the chance to get to your specific question, obviously apologize for that, but please do reach out to us at the info@amexexploration.com email address and we will do our best to respond. Obviously, we'll try to answer as many questions as possible as we get to. Also, please feel free to ask any questions in both French or English. Myself, Victor, and Jonathan are well versed in both languages, so happy to respond in either English or French. So the choice is yours in what language of the question you want to ask it. So again, thanks once again for being with us today. We're obviously very excited to be talking about the Phase 1 feasibility study for the Perron Project, and obviously extremely happy as an AMX management team as a whole with the results that we've gotten from this and the future that it holds for Perron. So we'll dive straight into the project. Obviously, I'll be making some forward-looking statements, of which you can find the entirety of this statement on our website, as well as our qualified persons and third-party data statement on our website as well. So first, I'll start off with project location, and I apologize to all of the people that already have a good understanding of the project in the company, but I'll go through anything just in case there are people here on the webinar that are brand new to the AMX story. Project location is obviously extremely important for us, especially as we've split out the future operation into a phased approach, and that today's feasibility study is just focused on the toll milling portion of that future operation. So as you can see here in the red star, that's the location of the Perron property, smack bang right in the middle of the Abitibi Greenstone Belt, about an 8-hour drive from both Montreal on the Quebec side or Toronto on the Ontario side. The entirety of our resource so far sits in Quebec, although we have aggressively expanded our land package over the last 12 months onto the Ontario side as well, on the same greenstone belt, and now control a 70-kilometre strike length off that belt. Infrastructure, local infrastructure that is extremely next to none for us. We're located in the town, right next to the town of Normantal, which was an old mining town that was built for the Normantal VMS mine, copper zinc mine, that was mined from the 30s to the 70s, all the way down to a depth of 2.4 kilometers. So the belt we're located along, you can see there are no gold dots there because there are no gold operations in operation along that belt in particular. There obviously will be that red star will eventually turn into a gold dot, but this belt in particular has been extremely overlooked from an orogenic gold perspective in the past. A lot of the historical exploration in the area has been done for VMS, and the orogenic gold has really been overlooked in the past. So in addition to what we already have, a lot of blue sky potential remains on the project. So importantly, operating mills in the area closest to us for the potential toll milling arrangement are the Casa Berardi mine that Orezone has just purchased off Hecla. That's only an 88-kilometre drive to the north of us, so about an hour's drive to the north. We would only have to pass through one small town called Villebois of about 50 people, so minimum impact there. There's a lot of capacity currently at that mill. Our largest shareholder, Eldorado Gold, who are 27% stakeholder of the company, have their Lamaque operation in the Val d'Or camp, obviously a bit further off a drive. But when we're talking about such high-grade material as we have here at the Perron property, and especially in the Champagne zone, when we're shipping 12-gram material, you can essentially go anywhere in the Abitibi and still come out with a extremely high margin. So these extremely profitable ounces that we're talking about. So like I mentioned, we have aggressively expanded the land package in the last 12 months or so. If you had talked to us at the beginning of 2025, we had the original Perron project in Quebec, which is where the focus of today's feasibility study is on, in yellow. That originally was a 45.5 square kilometre land package. In March of last year, we added Perron West in red, and in December we announced the acquisitions of Abbotsford and Hepburn in blue, as well as everything in purple we staked ourselves. We have actually already announced the acquisition of this block of claims up to the northwest, which has an additional 11 gold showings and 2 copper showings. So we'll be sure to update these maps very shortly as well. But we've now control over a 600 kilometre, well in excess of a 600 kilometre land package now. And we have a very, very healthy exploration budget for 2025 of $25 million to go and explore this vast land package. Recently, we acquired our drill permit in Ontario for our inaugural 15,000 metre drill program on the Perron West project in red there. So we are beginning to drill there very, very shortly with a two drill program. Just quickly on the exploration front before we get to the numbers of today's FS. This was kind of one of the attractions that originally drew us to the Perron West property, was this potential to have a mirror image of the Beaupré block, which is our rhyolitic dome that hosts the entirety of our 2.3 million ounce resource on the Quebec side, to have a repetition of that on the Ontario side, on the western fronts of this pattern pluton, of which a lot of the local deformation surrounds itself around. So that is one of the large exploration theories that I'll be testing over the coming months. And you can see some of these numbers in the bottom left-hand side of the screen that were produced from the historical compilation that we put together. This was overburden drilling that was done in the late 80s that really was never followed up on. Again, like I mentioned, the focus here back in those years was really on VMS and not gold. Hence why it was never followed up on. But to be getting numbers like this out of overburden, which is the material that sits on top of our bedrock, is quite exceptional. So it means for us that there's a lot of smoke in the area, and we have to go out and find the fire. So in addition to the resource we already have, the blue sky potential remaining on the Perron and Perron West projects is immense. This is the town of Normantal that we live and operate out of. So you can see our core shed there. All of our geologists, drillers, all of our employees either live in the town or do rotations into the town. So being a project that's located only 6 kilometres outside of an existing mining town is extremely favourable, not only to have the great local support from the local communities and our First Nation partners, but also from an infrastructure point of view. We obviously didn't have to build a camp or anything like that. We also have the electrical transformer station right next to town, which is only about 6.5 kilometres from the project back in this northwesterly direction here. So again, having this important infrastructure already in place helps keep our CapEx numbers very, very low. The town of La Sarre is a 25-minute drive to the south of us. There's about 12 to 14,000 residents here. So this is where a lot of our workforce will eventually come from as well. So again, great support from the local communities and really a lot of mining experience that already exists in the area. This just quickly shows the lay of the land at the Perron project. You can see it's pretty boring land, and that's exactly what you want when it comes to a mining operation. We're not on the side of a mountain or anything like that. We have no major lakes, no major rivers to contend with. just a few small swampy areas as you'd expect in the Abitibi. Additionally, this is mainly an underground project. So even if we're talking about everything phase one and phase two, about 90% of the material will come out from underground, and only 10% in the second feasibility study for the second phase of the operation, which will be completed over the coming years, is envisaged to come out of the open pit. So very, very minor environmental footprint here. So the permitting process should be very, very straightforward also. This was our updated resource that we put out last year, off which we built the reserves that were calculated for the FS for today's study. So property-wide, 2.3 million ounces in all categories. And the focus of today's feasibility study is very much solely on the Champagne Zone. The Champagne Zone alone holds almost 1 million ounces. And in today's feasibility study, obviously we weren't including any of the inferred ounces. So only the measured and indicated ounces were able to be translated into the proven and probable ounces that were calculated for today's resource. So a lot of people may have seen our Gantt chart, which really shows our vision for the development of the Perron Project, and we're really ticking a lot of the check boxes here in terms of putting the project into production. So a lot of people may have recently seen we've also obtained all of the permits required for our 40,000 tonne bulk sample. All of the permits from the Environmental Ministry, Mining Ministry, and surface land right usage are all in hand now. So we're able to begin work on that bulk sample. Already, as we speak right now, surface preparation work is underway. And we will be rewarding the mining contract in the weeks to come. And we could be blasting the portal for that bulk sample as soon as the beginning of Q3 this year. So literally only a few months away. The bulk sample is an extremely important part of the overall picture for putting the Perron Project into development. Obviously, today we're focusing on the phase one feasibility study, and then after this, in the years to come, we'll be beginning work on the phase two feasibility study, which then looks at the construction of the on-site mill and the tailings management plan and everything else that goes into the full build out on the Perron Project after the toll milling phase of the operation. So just quickly, this is the mine plan for the bulk sample, and again, very important for the overall specs of the project. All the numbers that you'll be seeing today in the feasibility study don't take into account any of the assumptions that will come into fruition for during the bulk sample. So all the costs that will be sunk into the bulk sample, so the portal, ramp, surface infrastructure, all the rest of it for the bulk sample, that number would be decreased, would be subtracted from the phase one capex requirement for the toll milling scenario. So I'll explain that a bit further later on. So we would have, so like I said, blasting the portal at the beginning of Q3 this year, about 12 to 16 months of ramp development to get down to the stopes that have been selected for the bulk sample. Our block model is telling us that we'd be producing anywhere between 20 to 23,000 ounces from that bulk sample. So that could be a potential large revenue influx to the company in the later stages of 2027, which could also go against the phase one capex requirements. The metallurgy on the Champagne Zone in particular is obviously not only important, but extremely favorable. You can see in the bottom-hand side, left-hand side of the screen here, the metallurgical results that we already had in place from 2020. We also did a more advanced round of metallurgical test work that was led by our metallurgical consultants, Sutex, which are one of the most highly regarded metallurgical consultants in the Abitibi. They sent off a 120 kilogram composite to ALS Global, and essentially got very similar to results that what we had previously reported. And more importantly, made sure that our material is going to be compatible to the flow sheets in the mills in the local area in the Abitibi that Amex is looking at. So 75% or better came out via the gravity circuit, which is exceptional numbers, and again speaks volumes of the nature of our mineralization in the Champagne zone. You can see on the right hand side there, large free gold grains within our quartz veins, not trapped within sulfides or anything like that. And that's why we're able to skip out the flotation process from our flow sheet. So a very simple flow sheet, gravity circuit, straight through to cyanide, the cyanide circuit, and we're able to achieve an overall recovery of 97.5%. This is actually an increase from our previous PEA, as we were using 95% in the PEA, and now we have an increase in confidence, and we've gone up to 97.5%. That includes also any ore loss in the system as well. So this is the stopes that'll be mined out during the first phase of the operation during that 5-year toll milling scenario. So like I said as well, that portal and ramp down to the Champagne zone will have already been put in place during the bulk sample phase of the operation. And to spin the model around in a westerly direction here, just to give everyone a reminder of the vertical nature of the ore body. So the ore body dips well in excess of 85 degrees to the north, so essentially almost vertical. So that really helps us keep down the OPEX cost quite significantly as well. If you had an ore body dipping off in a 45-degree direction, your OPEX cost can be quite a lot higher. So gravity is our friend here, not only in the processing circuit, but also in the mining processes as well. Here, gravity is our friend. So very simple mining method, longitudinal long hole stoping with cemented backfill. We haven't changed the mining method from the PEA to the FS. All of that has stayed the same, so no changes to report on there. This is the mineral reserves that was calculated from the resource for today's FS. So like I said, only the measured and indicated ounces were able to be considered for the proven and probable ounces that were calculated for the reserves that have gone in today to today's FS. So because those inferred ounces weren't able to be included, which were at a lower grade than the M&I ounces, we've seen a slight increase in the grade also. In our PEA, we were at slightly above 10 grams per tonne, and now we are at slightly above 12 grams per tonne. And this obviously includes all of the mining dilution as well as the gabbro, the mafic intrusion that sits in between our two veins that make up the Champagne zone, for a total of 774,000 ounces over that 5-year toll milling period. Not much in this slide has changed, except for obviously the image on the right-hand side has been updated there. Average stope width is 4.5 meters. Property wide in the PEA was 4.7 meters. So we're at 4.5 meters for the Champagne zone. So essentially no change there either. I've spoken about the vertical nature of the deposit. Exceptional grade continuity. As you can see in the image there are no gaps in the stopes on a level by level basis. So every level has stopes on it. So the continuity of the mineralization, especially within the Champagne zone, is next to none. Simple metallurgy and easy site access I've already spoken about. Very supportive communities of Normetal and Val Canton, as well as our First Nation partners, the Pico Gang. So this is the mine plan here and the grade on the right hand side. So the mining rate has increased slightly from what you would have seen in last year's PEA. It was at 1,000 tonnes a day. For the FS, this is now increased to 1,100 tonnes per day. You can see the mining plan in the left image there, how the mine will be developed on a year-by-year basis. And you can see the grade on the right-hand side of the screen there. So every stope in pink is a stope of 10 grams per tonne or higher. So once again, another reminder that this is an extremely high-grade project and zone that we are working with. The toll milling operation will be contractor operated, obviously with Amex personnel overseeing the contractor during this 5-year process. The design of the ramp will be 5 meters by 5.3 meters, and those dimensions will remain the same throughout the bulk sample and the phase 1 operation. So everything that'll be done for the bulk sample will be to full mining specs. You can see the dimensions of the stopes here, as well as some other information on the mine. None of that really has changed a lot from the PEA either. And we'll be peaking during this 5 years up to 253 workers for the first 5 years of the operation. So obviously brings a lot of important well-paying jobs to the local area. This is how the surface infrastructure will look like for the first phase of the operation. And again, a lot of this infrastructure will serve 2 uses during the bulk sample, and then once again during the first phase of the operation. So as an example, the water treatment plant, obviously the portal, some of the overburden and waste stockpiles, office buildings will be exactly the same for the bulk sample as it will be for the first phase of the operation. As a reminder, our proximity to the town of Normantal, if I spin this back in this direction here, you can see the town in the background there. So we're close enough to the town to be able to take advantage of all of its existing infrastructure, including the electrical transformer station just here, but far enough away from the town as to not disturb any of its residents. So essentially, if you had to choose somewhere to put a mine site, this would be where you would start, right next to an existing town with fantastic infrastructure, but not too close to the town, and a safe enough distance away. So the gold production profile over the 5-year toll milling period for the first phase of the operation. You can see it here for an average of 147,000 ounces per year at an AISC of $910 per ounce. So that has significantly come down as well, which the AMX team is extremely pleased with. And we have a breakdown of that in one of the slides to come. 12 grams per tonne fully diluted grade, as I mentioned also. So this is a breakdown of the phase 1 capex requirements, 194 million, as I'd mentioned. And importantly, and I'm repeating myself, but another reminder that all of the assumptions that for the bulk sample are not included in the economics of the phase 1 capex. So anything that is going to be spent on the bulk sample infrastructure-wise will be subtracted from that 194 million capex requirement. We'll also have pre-production revenues of 68.1 million coming in as well. This pre-production revenue is essentially the revenue that comes in when you're ramping up to nameplate production. So you announce nameplate production when you achieve 60% nameplate capacity of that 1,100 tons per day. So while we're producing at 100, 200, 300, and so on and so forth tons per day, that revenue is considered pre-production revenue, just to give a clarification on that. This is the breakdown of our industry-leading low AISC of $910 US an ounce. The decrease in the AISC from the 1,165 that we had it in the phase 1 of the PEA from last year really comes down to a few important things. Obviously, we've increased that mining rate from 1,000 tons per day to 1,100. The grade has gone up from 10 grams per tonne to 12 grams per tonne. And it's important factors like that was able to reduce that AISC to well below $1,000 US per ounce. Some of the important numbers from today's economic analysis from the phase 1 FS. The study was done at a base case of $3,500 US per ounce. Spot price over the weekend was at $4,750. So at 3,500, we have a post-tax MPV with a 5% discount rate of 1.1 billion. IRR of almost 115% and a half a year payback period. Again, that extremely exciting half a year payback period really comes down, excuse me, to the high grade nature of the deposit, and this is really why it pays itself off so quickly. We also have the sensitivity analysis on the right-hand side of the screen here. So obviously any appreciation to the gold price is obviously favorable for the project, stating the obvious, I know. But even in a depressed gold market, and this is really a point that we try to drive home, even in a depressed gold market, I don't think anyone on this call believes that gold is going back to 2,500. But even if it were to, we still have extremely healthy numbers at the Perron project. And again, that really comes back to the high grade nature of the project and of the Champagne ore body in particular. So if you were speaking about a lower grade project that required a multi-billion-dollar capex, obviously you're not able to have those discussions in comparison to the high grade nature of the deposit that AMX has. So the Gantt chart has been slightly updated, but essentially has remained exactly the same. So again, we're just checking the boxes here as along as we go with the business plan of putting Perron into production. So like I mentioned, we have all the permits in hand for the bulk sample now, and site preparation is well underway, and we'll begin mining in the second half of this year and extract those stopes for the bulk sample in the second half of 2027. Obviously, the delivery of the feasibility study for phase one is today's highlight, and we've already begun all the environmental and impact studies required for all the authorizations and permits that we'll need for the first phase of the operation, which we are envisaging that we'll have in place by mid-2028. We also believe we're being quite conservative with this timeline. If we're able to fast track the project to get into production even sooner than this, we'll obviously jump on those opportunities. But as it stands today, we think mid-2028 for the first phase of the operation is very realistic. We'd then be transitioning from the first phase to the second phase of the operation sometime in 2032 or 33. Obviously, the second phase feasibility study will begin later this year, and we'll have all the details of that as we move forward with the business plan. So a quick reminder of the cap structure: 142.5 million shares outstanding, bit under 150 fully diluted. You can see the 4 analysts that cover us in the middle of the slide here. And as a reminder, our largest shareholder, Eldorado Gold, are at 27% of the company and are very supportive of the project. Great. We have a technical committee with them, and they are great to work with, bring a lot of expertise to the project and give a lot of suggestions and guidance when it comes to exploration especially. So that was a very quick overview of today's feasibility study. So I'll now open it up for questions from myself, Victor, Jonathan, and the rest of the team, while I leave this slide here for the development catalysts and exploration catalysts that are remaining for the outstanding of the year and as we move forward.
Okay, so I guess I can start with some of the questions here. One of them is, how many other toll milling options and availability are there in Quebec and Ontario, basically in the Abitibi? I mean, we're currently negotiating for at least four of them, and there's still, even on top of that, there's many more mills that are available. We've hired a company called Sutex. They're actually processing experts for the Abitibi, and they've been directing us to the mills that we should be talking to. I've got another question about the community. Is local community support important? Yes, it is very important. We do have local community support. We've done community presentations. So one community is called Val Canton. There's about approximately 400 residents there. When we did the community presentation, there were well over 60 people that came there, and they were all very favorable to the project. There was not one that did not like the project. They wanted us, they wanted to know how quickly can they start working. Also in the province of the other community is Normetal. There's about 800 residents there. When we did the community presentation there was a little over 100 people that were there, and same thing, lots of community support. They want the project to go forward. First Nations, I've been at the project for 10 years. I joined the company back in late 2016. So we've been working with the First Nations since that time, and it's been really, really very good. We've had a great relationship with them, and soon to come, you'll see announcements of agreements being signed with them. One of the other questions is, what is the expected timeline on the toll milling agreement press release? So we do, in order to have gotten in order to get our bulk sample permit, we had to have a toll milling agreement signed. It's an LOI, and we will soon have to move forward. The press release that you will get will be when we sign a definitive agreement, and we're going to have most of the details there. Um, the last question that I see here is basically, when do you think that we would start seeing assay results on the upcoming drill program in Ontario? Soon to come. The drills in Ontario have just started turning. We will update everybody on that. In the coming days, we will update everybody that the drills have been turning and how many of them are turning. And it's going to just take time for assays going forward. Um, yeah, there's. So the bulk sample, we did state it. We're going to need more or less in the $50 million range. And how will you raise it? We'll definitely inform the market on that. There's many opportunities to do it. You can do a prepay, which is like a gold loan. You can do a convertible, you can do a straight loan, you can do equity. We're not decided yet, but we're definitely going to choose what's best for the shareholders, the least dilution possible. With a deposit of this type, we're lucky enough that we have a lot of optionality, even on financing the bulk sample. And really, what's really great, like Aaron said before, you raise that. Once you got that $50 million to do the bulk sample, a good portion of it, probably in the 65% range or so, will end up being infrastructure that you need in the phase one. But again, to be seen on that, but it's definitely coming. It's definitely coming up. Um, the other question is, what is the assumed total dilution assumed? Does the mine plan assume recovery under the CRF slopes? And when do you anticipate a toll milling agreement to be signed? So again, the toll milling agreement, I'll leave it at that. Aaron, you want to just briefly talk about the total dilution? Because I believe the dilution is already in the 12.1. It's
Yeah.
already in the 12.1 grams, right? So
Yeah, of course. So all the dilution of both there's a 35 centimeter mining skin, they call it, that is added to either side of the champagne system. That's included in the dilution, as well as the gabbro, the mafic intrusion that sits in between our two veins that makes up the champagne zone. So all of that dilution is included in that 12 gram per ton number. So I believe the dilution is about 20% or so, or it might even be a little bit more than that. We can definitely look further into that, and those exact numbers, we'd have them somewhere. But another thing that we'll be looking at is the potential for ore sorting as well. It's something that we're still very early days on. We sent off a sample to a group in Poland, and gabbro separated out very well from the quartz and the rhyolite, and the gabbro is where our main portion of dilution comes from. So if we're able to remove that from the system, that could be a huge economic win for the phase one toll milling portion, because you'd obviously be putting a lot less on the truck. So we'd be saving a significant amount in transport costs. So that'll be something that we'll definitely look at as a part of the bulk sample. I think the next round of testing, we need about a 2 or 500 kilogram sample to send off to the to those guys. So that'll be part of the work for the bulk sample, and we'll definitely take that into consideration.
Yeah, there's another question. I mean, I'll try to answer it as best as I can. It says, "Do you think the current share price accurately reflects the company's value?" I mean, this is my personal opinion. Absolutely, absolutely not. When I look at it from a NAV, or I look at it from a cash flow basis, I think we're very undervalued. Um, and I mean, the rest is speculation. Do you believe there's a possibility of the company being acquired, and what price would you consider an offer to be attractive? I mean, I wouldn't be able to answer that without getting in trouble with the regulators. So I'll leave it at that. I can answer you definitely that I don't believe that the price reflects this accurately, especially when you look at we're probably trading around 0.35 NAV. It'll all depend which NAV that you use. So again, that's something to be looked at. That's really my personal opinion on that. Um,
As another question on the ore sorting and the rock mechanics. Yeah, so like we were saying, the ore sorting is definitely going to be looked at, Eric. So if we can remove the gabbro from the system, that's going to be another huge economic windfall for the first phase of the operation. And rock mechanics in the Champagne zone, that's something that was studied for the feasibility study. So done a lot of geotech drilling as a part of the feasibility study. So all of the rock mechanics has been looked at, and obviously the details of that will be in the 43-101 report that'll be filed on CEDAR in the coming 45 days here. Graphite zone, no, we don't. There's no graphite zones in or surrounding the Champagne zone, so we don't have that to worry about it either. So the rock mechanics are essentially very, very strong surrounding the zone. So no issues there.
So that's great. Look, I think we've answered. All the questions, or the majority of them. In case we didn't, please feel free to contact us at the info at amexexploration.com. Hold on, I got somebody else. Not a question. Thank you for an amazing work. Okay, and de-risking the project and ticking the boxes. Thank you for that. If you have any other questions, again, just feel free to contact us, and we will get back to you at info at amexexploration.com. I really want to thank everybody for their time, to take out of your day to listen to our conference call. I'm really happy and proud of the company and the team, what we've been able to achieve. I just want to note for the market and also for the entire team that since September of 2024, we've put out 2 resource reports, 2 PEAs, and an extremely positive feasibility study, and a great plan on how to move forward to take this project into production and to bring a lot of shareholder value to all the shareholders. So thank you very much, everybody.
Thanks all. Appreciate your time.